Hi guys, welcome back to the channel. If you are new here, my name is Menelik and I'm an FTMO trader. I am going through ICT mentorship right now, the 2022 mentorship, and also I'm doing some back testing today. And one of the things that I struggled with recently was finding like the difference between pips or setting lot size for indices, which is very different from forex. I learned how it works, so I'm gonna break down how you can calculate your lot size when you are trading indices instead of forex, instead of your USD, GBP USD. And also I'm gonna go through a backtesting that I did earlier based on ICT concept. I will start with how to calculate lot size for indices, S&P 500, NASDAQ. Forex, we measure risk and the expected return on the trade by counting pips and using the appropriate lot size for the trade. But with indices such as S&P 500, NASDAQ, and US30, we count points that are slightly different from pips. If you are new to trading indices, you may be caught up off guard. I did in a trade using forex lot size calculator. Usually the one that I use is pips calculator, position calculator, which gives you the lot size based on the percentage. And when I started trading indices, I got the same issue as well. So you may be caught off guard in trade using lot size calculator and take a big loss in a trade or something like that. So I will break down how you can calculate your lot size when trading indices, so that you don't over leverage in your trades. Here is a breakdown. The breakdown is pretty simple. Here is an imaginary price for S&P 500, which we have the price sitting at 3983.75, and let's say you are shorting the market and you short all the way to 3883.75. so this is where you are selling at. This is where you want the price to be at. The difference between the two is about 100 points. We don't count the decimal, so the move from 900 to 800 is about 100 points, and 100 points from indices is equal to 1000 pips, which means that 1 point is equal to 10 pips. And we also know that in forex, if you are trading on MT4 or other platform, that 0.01 lot size means 10 cents, $0.10, which means 1 point is equal to $1, because it's like 1 point is equal to 10 pips. So if 0.01 is 10 cents per pip, or 10 pips is gonna be multiplied by 10, which will be $1. So now 1 point is equal to $1. If you are trading, let's say you are trading S&P 500 on MT4, and then you are risking a lot size of 0.01, the move of this, if this turn from 83 to 82, you will be making $1, or if it turn from 83 to 84, you will be losing $1, which means this is 1 point, and in terms of pips, that's 10 pips if every time this one change. So 100 points move in indices is probably equal to $100 if you are risking, if your lot size is 0.01, and the 0.01 lot size in indices is $1 every 10 pips move, and every 10 pips move is equal to 1 point, which we have here. I hope this little breakdown will help you guys understand a little bit better that 0.01 lot size in indices doesn't mean 10 cents, but it means that you are risking $1 per point that is moving in the market. This is just a breakdown. I hope it helped you guys. If you have any question, leave it in a comment. And then now we'll go back on the backtesting that I did earlier and kind of just explain my thought process through it. And it will be on S&P 500, a June contract, or long-term high and intermediate high, and then it will be based also on a bullish continuation into a fair value gap. When usually we see price coming close to a daily order block, it retraces a little bit, then accelerate, taking old lows or highs, but then accelerate into a order block, failed right here, and anticipating this move right there. Maybe you didn't have any opportunity to get in the market, and then this is what we're looking at. We're looking at this setup right here.
So we know this is a daily order block. and we have buy side liquidity here waiting to be taken out because price fell short of that buy side liquidity. So our aim for the day, like I said to say, don't chase price, right? We are looking at a couple of things in market right now. We are looking at if price trade back into this fair value gap, we will be bullish in this case. And then we see how price is moving. So as price moves, it created a high here. Created a high, which we'll call our long-term high as this price is falling. Everything that I'm doing here is based on insight. It's just studying the market and seeing how price move and understanding what causes price to move. So that's basically what I'm doing here. So we have a long-term high forming, and we are expecting a move back into the fair value gap. But we never got any move back in the fair value gap. Now you're wondering, is that okay? So if I was waiting for move in the fair value gap never happened, what should I do to get this move leg up, right? Here's the thing. I see this short in his mentorship, and I'm trying to recreate it on a different setup that I think it looked like it. So as we are looking at price here, we have an intermediate term low here. Why is this an intermediate term low? Because it has a short-term low to the left of it and a short-term low to the right of it. This is the swing low. It's a swing low, but because it didn't take out the swing high, the swing low here, it is considered an intermediate swing low. And kind of like the market maker showing you their hands of, like, you know, the move in the market. So we have a long-term high. We have a swing high fell from this one. This one doesn't have a swing high to the swing low to the left of it. Now does it have a swing low to the right of it. So this is just a short-term high. It's not an intermediate, but it's just a short-term high. Now, what ICT says is that if we have an intermediate swing and we have a short-term swing next to it, we are looking at the short-term swing as a PGRA. If price comes back into it, it is going to be considered as another block. So in this case, our block will be this last down candle. So this is going to be our block. Now, so that is going to be our order block, and so that will be our order block. And what we're looking for right now is to see if price expand from this level. So create an intermediate term low. It moves away from it. We know that price is not going to come back to take out this intermediate low because it confirms by not taking the long-term low here. So what we're looking for is confirmation for our trade to come in. So we have one couple of confirmation that we need, right? So this is what reinforces our trade here. So because we have a support, a confirmation here of price not taking the long-term low, right? Failing here, trading higher, creating a fair value gap, an imbalance in price, trading with energy. The move here is energetic, and having another block right here. I'm pretty sure if we go down on 15 minutes, which I can't because that's you need premium to go that far to see the candle. If we go back on 15 minutes, I'm pretty sure we'll have the confirmation of the other block because I can see the wick of the candle all the way up here. So we'll probably have this candle drop back into the other block, and this will pretty much be our entry here. Well, will be our entry. Our first aim will be the buy side liquidity, and then we'll continue to aim for that level. That's basically the reason why we had such an aggressive move. And in case you missed the move below here, you missed the entry here, or this one, that's your entry for the continuation all the way up to the daily order block. One of the things that helped the confirmation is because at opening price midnight here, we have price. Open of this candle is 40, 48, 50. 40, 48, 50. So price open here. This is midnight open. Give me yellow. No. Give me pink. Okay, whatever. Yes, we have power of 3 in market because this is midnight open. The candle open, it trade below, back into this, taking this all the short-term high, and then extending higher, creating a fair value gap using being energetic, trading back into it. Bang, bang, bang. So this is a backtesting that I did today, and I want to share it as well as how to calculate your lot size when trading indices. So if you guys have any question, leave it in a comment. If you enjoyed the video, leave it in a comment. I'll be putting out regular videos about, because that's my studies, that's kind of like my journal. So I'll be sharing it with you guys. If you like it, subscribe, and then join the Telegram or the Discord, and we will continue to connect and educate ourselves and become better trader. So until next time, safe trading and good luck in the market.